like. And so thank you all for joining, and thank you, Sri, for this excellent panel that you put together. As we said in our invitation, this is not an area we know a great deal about, so we really appreciate the input, the insights we're going to get today. In the last few weeks, we've been trying to stay connected with our community and exchange best practices. And that's been, from all the feedback we're getting, that's been very useful and much appreciated by our members. So this is just a continuation of trying to add value to our membership, charter members and general members. So Sri, I'm really looking forward to this evening, and thank you to all the panelists, including Elizabeth as well, and Harish and others. So Sri, take it away.
It's great. Thanks, Raman, and thanks to Ty for the opportunity. And most of all, thanks to my fellow panelists for taking the time and, sharing your thoughts with the community here. So with that, okay, Vijar is here too. Okay, so we got all the panelists here. So yeah, it looks like we have a great turnout. More than 60 folks registered for the event. So thanks to all of you for attending. We've been thinking about crowdfunding for a while. This is an exciting topic. And the way things are going right now with the funding avenues being kind of shut or semi-shut, we believe it's a good time for crowdfunding to shine. There are a lot of exciting ventures out there to be funded, and crowdfunding lends itself to be a good avenue, and you would hear that from our expert panelists here. Just a couple of housekeeping items. We would go through a few scripted questions for the panelists initially, and so I would urge you to kind of hold off on your questions. I mean, you can put them in the chat, raise them in the chat window, and we'll try to get to them towards the end. The other thing, if you're not speaking, please do try to mute so that we don't get any, extraneous noises. So with that in mind, I mean, why don't I go? I mean, myself, I'm Sri Chidipalli, one of the charter members at TIE. I've been associated with TIE for almost a decade now, and we have an exciting group here at TIE New Jersey. And with that, why don't I go around to my fellow panelists to kind of give a brief introduction. And after that, we can kind of jump right into some of the topics. So I see Elizabeth right there on my top left. I mean, she's joining us from all the way from Los Angeles. So Elizabeth, why don't you introduce yourself?
Hi, everyone. I'm Elizabeth Eichhorn. I work for iFund Women, and I'm one of the startup coaches. I am honored to be here. I'm so glad I'm here. Our CEO is based in New Jersey, so that's how a person from LA is a part of this New Jersey conversation, just so we're all clear. But we also are a global platform and help people around the world to help get funded through crowdfunding. So I'm excited to be here. Thank you.
Mark, you want to go next?
Sure, I just had to unmute myself there. My name is Mark Roderick. I'm a crowdfunding lawyer. I have been doing nothing but crowdfunding in various forms since the Jobs Act in 2012, and represent portals and issuers and investors all over the world, basically, in raising money online.
Great. Harish, you want to introduce yourself?
Yeah, by all means. Thank you, gentlemen, and hope everyone is staying safe in these pressing times. So I'm Harish Prasanna. I'm the founder and CEO of OpenAvian. So we are an antivirus company I'll come around, discuss about the company later. But we just did our big round. We did a crowdfunding round and did a follow-on round to make us whole. And we're glad we did it before COVID. But we'll talk in a bit.
Great. And most people know Vijar, but still, Vijar, want to introduce yourself and what brings you to crowdfunding?
Absolutely. Thank you, Sherry. It's great to be a part of this panel as well. Everybody knows me. I did the last series for the small businesses and NJEDA programs. I'm a charter member as well, and I've been involved with several successful crowdfunding campaigns. So I figured it'd be good to just share my experience with the rest of the group. Thanks.
Thanks, Vijar. So I thought we'll take a few minutes and for Mark to kind of give everybody a quick intro to crowdfunding. I know most people would have heard about it, must have read about it, but Mark, it might help to give a quick intro and some of how does it differ from angel, VC, other kinds of funding. And then also, if you want to touch upon some of the regulations and kind of, what are some of the exciting things that are going on in crowdfunding today?
All right. Well, that should only take a couple hours. So let me get started. No, I will try to make it very brief and high level. So there are two kinds of crowdfunding, just for those of your listeners who might be confused. The two kinds of crowdfunding are, on the one hand, we have donation and rewards-based crowdfunding, things like Kickstarter and Indiegogo and GoFundMe and a whole bunch of others, where you basically go online and ask people to give you money in exchange for a baseball cap or some other token of appreciation, but it's not an investment. No one's getting paid back. No one's making a profit. That's why it's called donation-based or rewards-based crowdfunding. The other kind of crowdfunding, where I spend all my time and which we're going to spend the remainder of this program talking about, is what we call equity crowdfunding. And we use that word just to distinguish it from donation-based crowdfunding because, in fact, a lot of equity crowdfunding is debt. But the point is, it's investment crowdfunding. You're not offering baseball caps when you raise money. You're offering some kind of return, just as you would in the paper world. You're issuing stock, or you're issuing notes, or revenue sharing notes, or preferred stock, or convertible debt, or something, some investment. Okay, so that's the kind of a high level, because you'd be surprised still at how many people. Today I had a conversation with someone who was talking about crowdfunding, and he was saying, well, how does Kickstarter fit in with this? So anyway, that is the top level. So crowdfunding, equity crowdfunding became legal with the Jobs Act of 2012, and that was signed into law in May of 2012 by then President Barack Obama. Those words sound good to me coming out of my mouth. And the big deal, okay, was those of us who have been around before 2012 and practicing law or engaged in venture capital financing or angel financing, we all used to know that when you were raising money for a private company, it was absolutely illegal to advertise that offering. That's something all of us knew. It was a basic fundamental concept of American securities laws and had been since 1933. That's what the Jobs Act changed. So that's the big deal. Under all the different kinds of crowdfunding, the huge difference between the old world and the new world is that you can advertise. And there are different kinds of crowdfunding that I'll get into very briefly. And in some of the kinds, there are some restrictions on advertising, but there are other kinds where there is no restriction whatsoever. So, you can go down to the New Jersey shore and pull a banner behind an airplane to advertise you're selling stock in your company. You can put it on billboards. You can take out a full page ad in the Wall Street Journal if you can afford one. But of course, mostly what people do is you can advertise online. So just to make the point, in 2011, if you were trying to raise $250,000 for this startup you had, you had to call your friends and your parents and your relatives and your lawyer and your accountant. Do you know someone who might be willing to invest? You just, door to door, basically, selling encyclopedias. Do you want to invest in my company? In 2013, suddenly, you could put up a website and advertise your company to every investor in the world legally. And that, I hope I'm making the point, that is an enormous difference. So that's what crowdfunding is about. As I said, there are three different kinds: Title II, Title III, Title IV. I don't want to spend much time talking about those, but Title II is accredited investors only. Title IV is basically a mini public offering. We also call that Regulation A. And then Title III is this brand new animal in American securities laws, where it comes with a lot of restrictions, although some of those are about to be relaxed. You can only raise $1 million. The investments are limited per investor quite strictly. Lots of, rules. But that is done online, and it is done without SEC approval. So that's what makes it a very unusual animal. And finally, just to touch on how does it differ, for example, from venture investing and angel investing. It differs in that principle. I mean, it's the same animal, right? The same kinds of instruments are being used. It's not brand new, but the nature of the beast is you're raising money from strangers. You're raising money without a personal touch. You're raising money by and large from relatively unsophisticated investors. You're not raising money from professional investors. You're raising money from generally unsophisticated investors who, you can put it this way, who bring nothing to the table but money, right? In the angel world or the venture world, you're raising money from people that you expect to bring more to the table. Relationships, expertise. From the crowd, you are just raising capital. And then conversely, kind of the flip side of that is the crowd doesn't expect very much of you. It expects you to make money for them. It doesn't expect to play any role in management. Okay, the crowd doesn't think it ever has the right to kick you out of your company. The crowd doesn't look over your shoulder and when you're making quarterly budget forecasts. So it's kind of the flip sides of the same coin. You're raising smaller amounts per person. You have a lot of people and they're strangers. So I think I've probably been talking long enough.
No, that's a great overview. And Mark has an excellent blog, aptly titled crowdfundingattorney.com. So you can find a lot of information. So with that, let me turn to Elizabeth. And Elizabeth, the whole principle or the motto of TIE is kind of, if you're a successful entrepreneur, you're giving back, you're giving back to other entrepreneurs, to society. Now you have a pretty interesting background. You've been a successful entrepreneur. You started 2 companies, raised crowdfunding money, and now you're a crowdfunder. So, can you
Yeah.
describe your experience, kind of being on the receiving end, and now, how you've been able to turn around and be a crowdfunder, and with that, kind of also talk a little bit about why you decided to join iFund Women. I mean, there's so many other platforms. I mean, what is it about iFund Women that kind of attracted you?
Yep, absolutely. Well, hi, everyone. Thanks again for letting me be here. So I am a two-time founder who utilized crowdfunding as a way, and this was a rewards-based crowdfunding that I used to help me get to the next level within my company. My company at the time was a food production company that it was really hard to find investors at that time. This is 2012. It was gluten-free products that I did not have a tech company. So the VCs, and even more so now, are looking for opportunities to invest in tech products. I did not have that. The Jobs Act did not get signed at the time that I was actually starting my company. And so that was not an option for me either. So the opportunities for me were crowdfund, bootstrap, go into debt, get credit card debt, take out a loan if I could even get one. The SBA did offer me a loan that was something like, I think if memory serves, it was astronomical. It was supposed to be like, low interest. And I think it was something like a 30%. I was like, cool, well, what's that about? So there were all these ways, but it kept leading me down a debt hole. Crowdfunding gave me the opportunity to say, I can raise a little bit of money for me to get to the next level and get over that hurdle for me to launch another product. And that's what I needed to do. So I did that. I was able to I crowdfunded successfully. I did it with Kickstarter. Kickstarter has you make sure that you are able to succeed you have to actually reach your goal for you to get any of the funds back. And then you have to be able to take those funds, fulfill the rewards, think about shipping and handling. And as a first-time crowdfunder who is also a young entrepreneur, I wasn't even thinking about like the P&L and the loss that I was having to take. So at the end of the day, and realizing that I had spent tons of time paying attention to the backgrounds of how Kickstarter worked, I started to understand that the rate of success is really low on that platform. The rate of female entrepreneurs that have success on that platform was really low. The rate of food entrepreneurs on that is astronomically low. And it was something like, I want to say 15% of a success rate. But I did it. And so I ended up talking about, well, I didn't have to go into debt. I still own my entire company. I still get to make every decision. And you could with, an equity base, that just wasn't an option. And so fast forward to where we are now, I work for a company that is a rewards-based crowdfunding platform that is focused more on female entrepreneurs. And the reason why is that female entrepreneurs still don't have the funding or the opportunities to get funding for their company. So iFund Women is all about being able to help women entrepreneurs overcome those hurdles, be able to utilize crowdfunding not only for funds, but to market their ideas, market their product, utilize crowdfunding in a way where you can actually test your audience before you launch the entire product into the world and spend all of this money and capital where maybe it's something that, maybe it's not something that the audience doesn't really want. So why did I come into iFund Women is because I want to help female entrepreneurs, because I have been one, and I understand how hard it is to find funding. And iFund Women has created a platform that allows for women to take that crowdfunding model, the rewards-based crowdfunding model, walk you through it through coaching. We've created methods that say, this is really what you need to do. And we walk you through step-by-step on how to do that so that you have a higher success rate. And those who go through the entire iFund Women method actually have a 27 times higher success rate than those who don't.
Great. Thanks, Elizabeth. And I encourage everybody to check out ifundwomen.com. lot of interesting stories there, successful case studies, and they go beyond borders, even help companies overseas. And Elizabeth's personal experience also is kind of a testament to why crowdfunding is so relevant today, where so many folks unfortunately find themselves between jobs and might have those amazing ideas which they can put to work in today's situation. So Harish, let me turn to you. I mean, you have a pretty exciting company. I mean, you're in the quote unquote hot areas of cybersecurity and blockchain. I mean, you would have no trouble getting funded. I mean, I'm not talking today, but when you raised your fund, last year and all that. So angels would line up, VC money. So why did you decide to go with crowdfunding? Well, why did you pick, Seed Invest? And, if you want to just kind of talk about that, and also kind of give a quick overview of Open AVN for folks, who might want to know what you do.
Absolutely. Thank you very much, Sri, and thank you, everyone. So OpenAVN is a open antivirus network. That's the acronym. So we are a decentralized malware and digital threat mitigation platform. We collect and identify malware in 3 to 5 days and make our customers immune, from the industry's average of about 30 days. So let's say there's a new ransomware, we'll make sure that, the signature reaches your computer in less than 3 days. Having said that, we are a blockchain-based company. That's why we call it decentralized these days. But touching the concern that Sri brought out there, although we find ourselves in the keyword nirvana, having blockchain, AI, and cybersecurity there, blockchain had a bad rep in early 2018. A lot of companies had come about, and they have, some companies have just raised a ton of money by doing ICOs and IEOs, and I'm sure some of you have invested perhaps in one, but there was a loss of reputation when Beaver coming on board, and we actually held back in doing our ICO, which we were supposed to launch in 2018, but we did not go forward because we did not want to join a league that was not approved by the government, was not square with the SEC, because we were a United States company at that time. So granted, we also raised about $250,000. We did a friends and family round before we got to seed funding. So we had an alpha product, and then Seed Invest was an interesting company. So they reached out to us early in February 2019. Well, I kind of knew that Seed Invest was a good company because of the portfolio, what they have, and the kind of investors that are in their platform already. All of that was interesting, but the challenge that they posed to us was the most important fact. They told us that, Harish, we have picked you in a list of 10,000 startups that we have start at the beginning of the year, and our selection criteria is this, and we select 1% of the companies that come out of this. And they presented us with a pretty big challenge that we thought, all right, given that we are a blockchain company, given that we bring in cybersecurity solutions, and given that we are also have a pretty niche product in the market that we are trying to prove and find a niche for ourselves. So we said, all right, we'll take up that challenge that most of these ICO companies, most of these companies that do an ICO and have failed miserably or have deceived investors, we want to prove them wrong. We want to prove that ICO was not the way to go at that time, but being a vetted deal through a reputed platform would put us in a pedestal, was the better idea or the rationale behind. And most of it was the checklist that they gave. And I did look at Seed Invest, who was owning it at that time. Apparently it was a investment wing of Goldman Sachs, is behind the tills. And apparently as soon as they selected us, Circle is one of the biggest, or one of the first companies in New York to be awarded the BIT license, which means you could trade Bitcoin legally in New York, in a highly regulated region as it's New York State. Circle then acquired Seed Invest, and we just felt that much more confident with the move that we made. By that time, we were already halfway through, the fundraiser, and the questions, the preparation, what was required for the SEC filing, the valuations. And of course, the valuation, they had to give it to us that, they only considered 4.5 million. That's where you stand. That's where companies do well. And this was pretty much given from them, and we did look at other deals, and companies that were sizable to our standard had a similar valuation. So we did about $4.5 million in valuation. And I did see a question, but somebody asking, what is the criteria for valuation? It's usually the league that you join. And Seed Invest being in that layer, and the typical deal size, the valuation of the company would be anywhere between $4.5 to $6 million, depending on the revenues. And there are several factors that Mark articulated. So we did a Reg CF and a Reg D combination crowdfunding. We set ourselves a goal of $500,000, and it wasn't easy. They made it tough for us, or they said, all right, you have to raise X amount of money in Reg D. Regulation D meaning we can only access accredited investors, and only them, they have to be part of the deal. And Reg CF could be anybody investing less than $20,000 and starting at $1,000. And there was a contingency that we would have to raise X amount of money in Regulation D for us to cash in on the Regulation CF, so that there was equal knowledgeable accredited investors' interest before we had claims over the funds that were raised from the public. That was another challenge for us. So that took us out to roadshows. We won at least 7 different hackathons, and in San Francisco, in Switzerland, in Dallas, down in Washington, even in New York. These were avenues for us to prove that we are a company. We have come out with a product, and we have the chops to get us out there. And these were the tools that we used to market our platform, our crowdfunding campaign. And we successfully raised about $410,000, and that was the end of our Seed Invest campaign. This finished back in December, and surprisingly, the word got out. Being a crowdfunding company and having filed those SEC papers that you're supposed to do as part of the Reg CF, and your closing, being open and in line and square with the SEC, gave us good visibility. PitchBook data picked us up. Crunchbase had all of our details updated without us having to do anything. It was up to date with the amount of funding that we had, and that made more investors and family offices approach us. So this $500,000 that we set up to raise on Seed Invest led us to landing another $1.5 million in January, bringing our total up to a $2 million in capitalization just in the seed round.
So look, I'm just gonna interrupt for 1 second just to make this point. So in the beginning of crowdfunding, there was a lot, and I still hear it today. Was a lot of talk among angel groups saying, "Oh boy, if you raise money through crowdfunding, that is going to prohibit you from ever raising money from serious people." That was never going to be true, but exactly the opposite has turned out to be true. I love that story, because what happens is that the crowdfunding raise validates the business model, and now investors who are able to write bigger checks are actually looking for you. So I appreciate that story.
Absolutely. Yeah. Thank you, Mark. And of course, we do share that. And again, just to finish off, I would say as an advice to other companies, I would say it is great to position yourself at a point where enough work has been done and taken care of, and the product is out there to launch. The investors that are going to be, even somebody that is just going to put up $1,000, will tear you down at the comment section, and you better be ready to answer them and have those have your cadence ready to make sure that you're able to withstand the scrutiny of the public. And that's a standing testament. You could go to our crowdfunding campaign link, and you'll find all kinds of comments that we had at that time, and us diligently answering them was really important. And the engagement of the entire team during the campaign is also most essential to show the group participation and the team participation, because you could be a small company, you could be based out remote and not have everybody together, but the website, the portals, and being a digital interface, the campaign itself having a digital interface is your home base, and everybody's contribution will just add up that much more.
Oh, it's great, Harish, and congratulations again for that successful campaign. The campaign, overview of the company and all is still available on Seed Invest. So if anybody wants to go there and check it out, still available. So with that, Vijar, I mean, I've known you several years now. I mean, typically I've known you as an advisor, as an angel investor, and some of the other things you do. I didn't know that you're active in looking at crowdfunding investments too. So can you kind of share your experience as a crowdfunding investor? What kind of pitches do you typically come across? And if there are some other members of the audience here who want to, who are all pumped up after this event and want to look at some crowdfunding investment opportunities, should they go about it? Of course, they should go to iFund Women first, and then other campaigns. But can you share your experience towards that?
Absolutely. So we don't look actually at crowdfunding deals. It just happens that over so many years of just being in the investment world, I've been involved with several personally. The first one, I'll just mention the 3 different platforms. The first one is actually iFund Women. I'm an advisor to Brown Girl magazine, so we helped. We had to launch. We're a small company. They've pitched to Thai New York in the past, and we needed to raise capital for an event. So Brown Girl magazine had gone through iFund Women. That's how Elizabeth and her team has been involved with Thai. So that worked out for that event that we held in 2019. The second one that I did was for a WeFunder platform. I was an investment partner for one of their Opportunity Zone products, which was not successful, but they were a very successful platform. There were just too many people involved with that. And the third one was probably my most successful one, which I was on the founding team and we're an investor in, is Hacker Noon on the Start Engine platform. We raised just above $1 million on a $7.5 million valuation. Hacker Noon is definitely one of the most popular tech platforms in the world. It's very close to TechCrunch. We have over 4.5 million readers. We were cash flow positive after 6 months. So after 3 years, we decided to raise $1 million. We raised quite a bit of money from VCs that invested directly in the platform. We had over 1,200 individuals invest that $1 million. So it was a very successful campaign, and it's very unique because it's a media publishing platform, which is definitely different from e-commerce and other donation-based and other startups in the industry. And the $7.5 million valuation is very, very comparable to a lot of seed or really early stage A and B round funding. So it was very successful in that sense. It took a long time, took about 6 months, but we were very, very happy with the results because we only had to sell about 14% of the company. So happy to answer questions on other platforms, happy to discuss that deal and other deals and the environment to the extent that I can. And
just a quick follow-up. So you think a lot of these emerging companies today should consider the crowdfunding route in preference to angel funding, especially in light of today's COVID or post-COVID world we live in?
Yeah, so I think it's always been a pretty successful platform. It's pretty straightforward on how you can execute. It's very transparent, which is the purpose of it. Besides accounting and legal fees, we didn't have any other cost fees. So you can go straight to your investor group and say, this is the platform. The beauty of it is you can get outside investors. In our case, for Hacker Noon, we had millions of readers. So we had about 75,000 people view our campaign funnel and have 1,200 people invest. So it's pretty high success rate in that sense. So if you have visibility, you have a social following, you can definitely take advantage of it. And it's an alternative form. Recently, crowdfunding can also be used for charitable things. So the Punjabi Chamber has just raised $30,000 in the last 2 weeks through that platform as well, on the GoFundMe platform. So it's not only for companies looking to just make money. It can be used for other things, but I think it's very, very transparent, which is not usually the case with angel and seed round investments.
All right, great. And talking about the legal aspects, Mark, over to you to kind of talk about if somebody wants to initiate a crowdfunding outreach, what legal aspects they should be aware of, what kind of offering documents should be prepared, how does it differ from a typical offering memo, and so on and so forth. And also regulations they should be aware of.
Yeah, so let me say this. I see, before I answer that question, I see a ton of really good questions coming in on the chat channel here. Very specific questions, great questions, and we're obviously not going to be able to answer. Well, I don't think we will, but have time to answer all those questions today. But we will. I just want to tell people, one way or another, to the extent you're asking me questions, we will find a way to get the questions answered, maybe just in a separate Zoom call or something. Okay, so this is where we get a little bit more into the weeds in terms of the different kinds of crowdfunding. And again, I don't want to be real long-winded and get too granular, but to answer your question, Title II crowdfunding, accredited investors only, okay? This is more or less identical in terms of documentation to a typical, maybe angel-funded syndication. There is there's a disclosure document, whether you call that an offering memorandum or a private placement memorandum or whatever other word, but it's a disclosure document, and there's an operating agreement, or a shareholders agreement, and there's a subscription agreement. So they are very, very similar. Now, the crowdfunding versions have some provisions specific to crowdfunding. Just to pick I'll pick two examples. One, which is really important, is from the perspective of the founder of the company. Founders of the company should be trying to protect themselves against legal claims from investors. Now, when you're dealing with sophisticated angel investors actually want to be able to sue you if you've done something wrong. So there's a negotiation there. With the crowd, you can and should take full advantage of the law, and you should pick a state that has favorable law, like Delaware, to protect yourself from the claims of what may be hundreds or even thousands of investors. So the document is the same, it has the same title on it, but there are some specific provisions. And then less significantly, but just to illustrate the point, in every operating agreement, you'll see a section about access to books and records. And it always says, any investor have the right with a reasonable notice to inspect the books and records of the company. In crowdfunding, No, we don't want to do that. We might have 250 people. You could have someone at your office every day inspecting your books and records. So you have to think about it. The documents are generally the same, but there are some very specific provisions that you include in crowdfunding deals, or at least should. Title III crowdfunding, this brand new animal, there is an SEC form, a disclosure form, and it's called Form C. It is a disclosure document. It's a template for disclosure. And so if you've never done Title III crowdfunding, you've never seen kind of a disclosure that looks like this particular form. So it's different, it looks different, but it's the same idea. It's disclosing facts that investors would want to know about before making an investment commitment. So that's Title III. And then Title IV,
I would like
as
to,
I said
just
sure,
a second,
go
Mark.
ahead.
Yeah, I would like to just add our experience in that direction. So just what Mark was referring, that disclosures was extremely important. Like right before we launched our campaign, we were told to submit all of our campaign material, just pronto, whatever we would use from day one to the end of the campaign, we had to submit it ahead of time, including video transcripts. So that was all part of this package that was submitted as part of the Form C that had the disclosures of what the founders were doing for the last 5 years, the job descriptions, what is the amount of money, the accounts, and any existing funding, what is the amount of debt the company has. All these were part of that disclosure document that we just that we filed right before we started. And also, after the campaign was over, there's a 15-day time period where you have to reconcile all the transactions and then submit a Form C closing form. And the obligations don't end there. Like, you have annual, accounts that you have to publish in your website and make public, and keep that ongoing until you go public, or there are certain criteria for that. So you have to every year, publish this audited accounts, so your investors have a chance to take a look at it. Granted, they don't have a chance to just let you know, and like all the 250 investors can't find you to audit your books, but the annual requirements take care of those things.
Yes, there is in Title III, there is annual reporting. It's not, if any of you have ever been involved with like public companies, it's nothing like that. It's a very simplified kind of annual reporting. On the other hand, if you've never experienced any obligation to report annually, then it can seem very intrusive. So that's Title II and Title III. Title IV, as I said earlier, is a mini public offering. So to do that, you have to hire a lawyer, and the lawyer's got to put together this thick document, an offering circular, and you submit it to the SEC just as if you were going public, and the SEC looks at it and makes comments, and you go back and forth, and you finally get approved. So that, from a legal perspective and the documentation perspective, is very, very different than the typical angel transaction. The only thing I will add here is it's also kind of a cultural difference in the angel world, and particularly as you get bigger and bigger deals. Everything is very personal, right? I mean, Silicon Valley is a ecosystem built on personal relationships. It's an old boys club in both kind of the best sense and the worst sense of that term. Deals get done based on reputation and relationships, not based on legal obligations. You don't screw someone in one deal, because then you'll never get invited to another deal. And investors don't file frivolous lawsuits just because they lost money, because if they do, they're never going to participate in another deal. So it's very much about personal relationships. The world of crowdfunding is not like that at all. it's the opposite. It's impersonal. So it's very important that the legal relationships be very carefully laid out in documents, because, you know, you're dealing with strangers, and even the strangers who invest in your company, you know, they're going to die. They're going to leave their stock to their son-in-law, who happens to be a lawyer. So you do have to be very, very careful when you're dealing with big crowds of people, that you dot your T's and cross your I's.
Thanks, Mark.
Yeah.
So, you know, we want to get to a few more questions, and then I know there have been some activity on the chat window, and thanks to the panelists for taking the time to answer those directly. So, Elizabeth, you know, you see, or iFund Women sees a lot of, you know, crowdfunding, you know, projects on your platform. So what are you, you know, can you kind of summarize what are your typical, you know, companies that come to your platform? What are you seeing? Sector, size, geography?
Yeah, well, one of the things that I wanted to mention, and I was just texting with my team, is that we have to recognize that funding for female and women entrepreneurs is still very low, and there are not opportunities. And so what we're seeing, and especially if they're not in the tech space, if they're in the idea phase, and what we're seeing with our reward space are women who have an idea. They might have, maybe they're a service-based business and they're not sure where to go next. That's why we exist. That is why we want people to be able to utilize something like a rewards-based crowdfunding opportunities so that they can get to that next level. I think one thing we have to realize is that, yes, there are two separations. Yes, there's the rewards-based and there's equity. Rewards-based doesn't necessarily have to just be baseball caps, by the way. It can be anything from actually testing out what you are doing as a reward. And I think that is what has given people the opportunity to test your product in the atmosphere, honestly, utilize beta tests, and you still get to keep your entire company at the end of the crowdfunding with a reward base with us. Then you can go on to the next place. Sure, absolutely. We're not saying don't do the next round, and we're not saying don't always try out other opportunities. We just know that there's such small opportunities for women entrepreneurs, and especially at this time, we're here to continue to help as much as we can. And so what we've seen are any products from food products to co-working spaces to I have had a handful of calls with people around the world today. We have skincare lines. We have AI skincare that's happening. We have female run companies that are doing sports activities right now. And they're just trying to figure out the best opportunities for them to get funded and to also get marketing for their product.
All right, great.
Sri,
you know,
I have Sri, I
sure,
was just wondering, I saw a question from Cyril. I don't know if he's still on or not, regarding investment by family offices into this field. I wonder if Mark could address that question.
Yes, Mark could address that question. I've actually seen some, heard from some people recently that family offices are making investments. I mean, they've always made some crowdfunding investments, but they're becoming, you know, more active in the crowdfunding space. You know, big picture, I'm answering your question, but I'm just going to take a step back. I always say, fortunately, the crowdfunding rules are very, you know, they have a lot of legal complications. And I say fortunately, because otherwise you wouldn't have to hire me. That wouldn't be good. But the big picture is that crowdfunding is just the internet. That's That's all crowdfunding really means. It means raising money online. And just as the internet has taken a position of honor in so many aspects of our lives, from particularly now, right? We're all of us sitting at home. We probably all have Amazon packages sitting out on our porch. But, you know, you find we do everything online. We renew driver's licenses. We find spouses. We buy houses, all kinds of things. And it was inevitable in that sense we were going to start raising money online, and that is going to grow and grow and grow. That's what happens with the internet, right? It's not a fad. It doesn't come to an industry and then kind of fade away. It grows and grows. And so what you're seeing is that crowdfunding began in 2013. The deals were very tiny. Real money wasn't interested. The deals weren't big enough or good enough. But here we are in 2020, and in some of the online real estate platforms, we're raising, you know, $15 million or more on a single deal. This is online, just crowdfunding. And of course, right, when that happens, those are good deals. Those are institutional quality deals that are getting funded. So if you're a family office looking for yield, looking for high quality deals, you might not have been interested in 2013, but you're interested today, right? I mean, that's where the future is. That's where the growth is. So what I anticipate happening, so to answer your question, yes, family offices are interested and will be interested. What I expect to happen is, you know, family offices may create their own crowdfunding platforms. Angel investors who up until this time have sort of, in a bizarre way, viewed crowdfunding as a competitor will begin to see that crowdfunding should be ancillary to their businesses. So you're going to see more and more institutional capital flowing in that direction. I am 100% sure.
So
Cyril had another question as well. Sorry, Vijay, let me which is, does recourse to crowdfunding then complicate Series A, Series B fundraising?
I'm happy to answer that. I mean, the answer is not if it's done right. I mean, we've just heard the story, you know, raise money on seed invest, and then there have been a bunch of companies who have raised money online and, you know, and then done public offerings. So yeah, sure, if you do it wrong, if you get 87 investors in your cap table and they all have voting rights and veto rights over everything and preemptive rights, yeah, you can really screw up your cap table that way. But if you do it correctly, then it's not a problem at all. Your cap table stays clean. You keep total control. So yeah, that is happening as we speak. Companies are raising, you know, follow-up rounds.
So I raise this only because I think from the viewpoint of our members, and I had mentioned that to Cyril, that a session on recourse to family offices and how that can be done effectively would be a good program for Ty to have at some future date.
So Elizabeth has a hard stop at 6, so I just wanted to make sure we get some additional thoughts from her before she hops off. So Elizabeth, you know, one of the questions that was asked was how, you know, yeah, I understand the aspect of reaching a wide investor base and, you know, the technology platform, but at the same time, you know, I'm just starting out. I don't need millions of dollars. I only need a couple of $100,000.
Mm-hmm.
I just want things to be simple, you know. I want to control the cost, the legal expense. So does your platform offer any kind of pre-canned, you know, the documents, the templates, you know, something of that sort to kind of let me get up and running in a few weeks?
Yeah, that's a great question. So we have, and I put this in there, we actually have a template that you can, it's just plug and play. It's like plug and drop kind of thing, where it's a template to get going for a crowdfunding campaign with us. I think one thing that people run into, and it can be really daunting, this like idea of crowdfunding and starting it, and it's really overwhelming. And this idea of like, who do you know who is going to be able, it doesn't matter if it's reward based or equity based, it's this space of, okay, cool, I'm putting my idea out in the world, and how many people are going to actually come and participate in helping me get to that next phase? How can my business survive in this? What happens next? Like, that is a huge thing I hear from entrepreneurs on a daily basis. And so what iFund Women has done is actually created a step-by-step guide for you to help you get through that. So honing your pitch and understanding really what is your pitch that needs to be said with 15 seconds or less, but it's clear and concise. And for those who are doing a crowdfunding platform through a rewards base, it needs to be something that is clear enough on a video that investors who want to come and invest, or Shark Tank, like we do have a handful of our folks who have been on our platform who have gone on into Shark Tank, like, people need to realize that you never know who is going to be on the website and on our platform to help you get funded into that next space. So you have to have a clear and concise pitch, and you then have to also have a network, essentially a CRM. We've created a space for you to have a CRM that is for you personally. So take those business cards, put them into this space, and use that. I mean, more times than not, how often do we all just throw away our business cards or put them into, like, I don't know, something around, like, I don't know, some binder, and you're like, maybe I'll get to it. Well, that's fine, but this is a perfect opportunity for you to utilize the fact that you've met somebody one day and they should be able to invest in your company some way or somehow. So make sure you do that.
And,
go ahead.
And your final thoughts before?
Before I go, yeah.
Yeah.
I would say my final thought would be this: realize that crowdfunding seems daunting, but we have coaches at iFund Women who can walk you through, and there are people who want to help you. And so don't be too scared about it. Hop on a call with us. We'll walk you through. Thank you so much. Mark, loved what you have to say, and I love what all of you have to say. Thank you so much for supporting everything that we do. And then there's one last question. Okay. Sorry, I'm going to read it real quick. So, many family offices in Maine today with over 1 billion USD are today under control of women. These offices are explicitly supporting female entrepreneurs. These assets are mostly inheritances from the family, so they own the assets as family members. These offices invest explicitly more into female entrepreneurs. Yeah, that's great. I love that.
Okay.
So, did you want me to talk about it? I don't know if Cyril just wanted me to say anything. That's great.
It's a comment by Cyril. All right. Thanks so much, Elizabeth, for taking the time.
Thank you all. I really appreciate it.
Yeah.
Thank you, Elizabeth.
You're welcome.
Take care.
Bye.
I know, Vijar, you had something to say earlier. I think you had some thoughts.
Oh yeah, I was just referring back to the family office comment. We've come across 2 or 3 family offices that have created their own platforms, but at the end of the day, an investment is, especially investment by group, is dependent on the lead investor. So it's not that if you put something open on a platform, you think your investment will just raise capital. You really need to have someone raising awareness. In our case for HackerNoon, we had the former founder of Reddit and his team initialized capital, make a large investment. That definitely built a lot of awareness. And I've seen that for a lot of large successful campaigns. There's definitely someone that has equity in the game or is definitely leading the round, which is definitely important to have a successful campaign. You can raise capital, but if you want to go beyond the limits, it's definitely important to have that lead round.
Great. Hey, Harish, you've been a techie all your life. I think it will, the attendees might also want to know that Harish has been an ethical hacker. That's what it does as a hobby. So anyway, so there are a lot of tech entrepreneurs at TIE, as well as, from students at NJIT and Rutgers who are associated with TIE. So how do these other tech entrepreneurs take advantage of crowdfunding? What can they do from social media aspect? Just use the power of technology, especially today with the social distancing environment we live in. Before, during, and after they launch their crowdfunding campaign.
Right. No, I mean that's a great question there, Sri, because even myself being a tech background based entrepreneur, I was just typing away. I was just coding things that I would make, and it would just sit in a folder, and that's that. And we would go into hackathons, and we would publish it. We would win prizes, some money, but that was the premise there. But this is most of the technical people in the community. Like, they know to do something. They know that they're solving something. Most of them turn out to become open source projects that are somehow end up being supported by the community. But as long as they're able to find a big enough problem that people are ready to pay for, and if they have a solution that matches a big enough problem, I would say that's your calling for crowdfunding. And I'd say even if there's no support, I would say the product must stand in testament to being enterprising and being strong enough that a crowdfunding platform shows interest, or you're able to enlist in a platform and able to gather the initial amount of funding that you need to drive home and create a product.
All right, great. Mark, you've seen a lot of campaigns, being an attorney in this space for so long. Can you share your experiences where you've seen, the projects which are really taken off or very successful, and the ones that couldn't get much headway? What were they typically lacking? And also, with your, in your experience, how long does it take from kind of initiating a crowdfunding outreach to getting the money, raised for a typical project?
Well, so you have to kind of segregate, to answer the first part of your question, you have to segregate the real estate industry from everything else, because real estate has been by far the big winner in the crowdfunding world. Just very, very successful, raising lots of money. Probably still represents 90% or more of the total crowdfunding space. So I'm going to put that to the side. In general, I guess I'll answer the question about what kinds of companies are successful in two ways. One, which is to put the rabbit in the hat in some ways. Companies that can get onto great portals like Seed Invest. Seed Invest, I've known those guys since the beginning, and they're a great platform, and they are very, very picky about what companies they get on the platform. They have a ton of committed investors subscribed to the site who trust Seed Invest to, only admit good companies. And so if you can get on Seed Invest, the chances are you're going to get funded. Now that, that's just kind of, it's a way to evade the question in some ways, because the question is, well, how do you get on Seed Invest? Well, if you have a good company and a good story. So the bigger issue, putting Seed Invest or the choice of platform, companies that have great stories are today the most likely candidates for successful crowdfunding. you can think of crowdfunding, it's meaningful to think of crowdfunding as the intersection between old-fashioned finance and modern social media. So if you can get a whole lot of Facebook likes and you're a promising company, you can probably get funded through crowdfunding. It's the sort of building an audience, building a community. And that's why probably the most, by number, probably the industry that has been most successful is microbreweries. Okay, this is not high tech, it's not high profit margins. In fact, they're all probably doomed for failure at some point. But people like craft beers, and that's what I mean. It's the intersection of social media with finance. I don't think Seed Invest lists breweries, but lots of platforms do. But companies that are very, very promising, if they don't have an exciting story in crowdfunding outside the real estate field, are much less likely to succeed. You know, I've been approached by a bunch of terrific companies. There was a metal fabricator in New Jersey, you know, great company, great engineers and so forth. And I mean, I said to them, metal fabrication, you know, what's your video gonna say? And that kind of company so far is not finding traction in the crowdfunding space. I'm sure it's only a matter of time, but the industry is too young right now. Just to give you a flavor, so in Title II, which is by far the most active kind of crowdfunding, accredited investors only, there's probably only 100,000 people, 100,000 American accredited investors who have made investments in crowdfunding issuers. 100,000, maybe 200,000 at most, I would say. There are 8.5 million accredited investors in the United States. So those of us in the industry think it's great. We see these deals being funded $10 million, $15 million, but we are the tip of the iceberg. It is a small sliver of the investing public. The number of non-accredited investors who have invested in crowdfunding is just minuscule, growing, but minuscule. So, you know, yeah, we're just at the beginning of the industry, and right now you need a story, I would say, to be successful in crowdfunding.
And quickly, Mark, you know, I think there are more than 100 platforms or so. So, you know, one of the attendees, Arun, asks, you know, I mean, how are, you know, is there a way to know which ones are good? I mean, is there an independent authority on ranking these platforms?
No,
right? I mean, there's nothing.
No. I mean, there are hundreds. Now, I believe that question was specifically about Title III platforms. If you also include Title II platforms, there are a whole lot more than that. But most of the activity actually is concentrated in just a handful of platforms, both Title II and Title III, of which Seed Invest is one.
And what's the budget somebody should keep in mind before initiating a crowdfunding platform? You know, what would you recommend?
Well, let's ask someone who, well, the answer depends on what kind of crowdfunding. The numbers vary considerably. And the other thing I will say is usually when people ask the question budget, they mean like, what's the legal and accounting cost? The point I would make is that crowdfunding is a marketing business. You should plan to spend a lot of money marketing your crowdfunding offering. As I always say, you know, there's like 1 billion websites worldwide, and a lot of them have really interesting stuff, you know, pictures of nature and beautiful animals and really interesting stuff. How do you get people to go to your website and invest in your company? And the answer is marketing dollars. How much did you spend on your seed invest? How much out of pocket were you?
Right. So I would say that that is a great answer, and it is certainly a marketing. That's the way to think about this. So the amount of dollars, the marketing dollars, on the other side is the amount of money that you're expecting for others to invest in you. That's the ratio that we are looking at. And for us, really, it was getting on the road, hitting up these major hubs that are discussing blockchain and AI, and presenting ourselves out there. And we expended time and effort that would otherwise translate to our visibility. And we got the big pedestals to talk about our company, and that led to more people getting to know about us. So we had an organic campaign in that way, but we also we did spend quite a bit on having to make the website ready and having an email campaign going. There are startup ranking companies that look at your deal and write reviews about it. Those help in the Googling when the investors search for your company. The reviews do come up, and that is also a significant thing to consider. And also, just to add to another point on what Mark was talking, what are some good companies out there that get funded? Y Combinator is your Bible. I would say just stick with the blog, and there's a lot of resources to get up to speed in crowdfunding. And if it weren't for Y Combinator, I would have never gotten this far. They break down the individual steps as to what is needed, what you as a founder must know when you sign a deal or sign and execute a term sheet. There's literally everything about term sheet listed on Y Combinator. And Y Combinator also has a request for startups link. These are the companies that Y Combinator is actively looking to fund. So they literally have listed about 20 categories in which you have a company. If your company falls in that category, Y Combinator would more than love to take a look at that deal. And I'm just going to post that link in the chat for everybody to take a look at.
Great, thanks, Harish. So, one of the questions being asked, and most entrepreneurs know this, and that the capital raising activity kind of is a continuous process, right? I mean, if you're successful, that means you use up the money, and unless you get gobs of operating cash flow, you're very likely going to go to the next round of capital raise. So one of the things we talk about in the fundraising world is to keep your cap table attractive or not be too overwhelming, and because managing your current investors is also a job unto itself. So any thoughts about that? I mean, what kind of crowdfunding outreach would you do? When do you stop? And how do you, keeping in mind that sooner or later you'll be on to your kind of more institutional VC kind of money. Vijar, you have any thoughts about that? Having a investor on both sides?
Yeah, I would focus on building a strong interest beforehand. I've seen some success with rewards based, so you don't dilute equity. That's really important when you're a shareholder and both an owner and on the employee team, that you maintain equity. I've seen quite a few. I mean, most crowdfunding campaigns fail. They simply don't have the art of marketing. They don't have the art of copywriting. They put in very little effort to convince people why they are good investments. And anybody that's actively investing usually can find better investments. So I think you have to put a lot of effort into that marketing. Hacker Noon didn't have to put in that much effort because we had such a large viewership. And we have 7,000 contributors every month. And we're definitely, we use Start Engine, which is a successful crowdfunding platform. The CEO and founder of Start Engine was a contributing writer for us. So it really helped us transition. It's important to have those cheerleaders really back and support you from day one. So once you start and you're not successful in the first 30 days, then you really just lost the momentum. And I think that's important when you do it anytime. You can do it 2 or 3 times over, but anytime you start the campaign, you have to have a lot of pre-marketing efforts ramped up before you launch.
Okay, great, thanks. I mean, Mark, if I'm an investor, I mean, there so some of the things related to kind of confidentiality, risk, liabilities, and so on and so forth. So as if I'm raising money, I mean, obviously, you know, you can't do NDAs with each of these parties. So what should you be aware of on those lines, as well as an investor? What are the liabilities? Because I understand some of the family offices, high net worth folks, by design, they want to stay away from some of the crowdfunding ventures because they might have some kind of you know, risk. So do you want to talk about those?
Well, if I'm understanding the question, I mean, as an investor, you don't have any risk. Your risk is you're going to lose your investment, but
there's no kind of legal exposure. Of course, the financial aspect is there, but anything on from a legal or reputational standpoint they should be aware of?
Well, there certainly shouldn't be. You know, a competently created by, and competent I mean by, you know, lawyers, document and choosing the right entity. That's just very basic, and it should all be done in a way that completely shields investors from any personal liability other than, you know, losing their money. You do. So people often ask me, you know, I get interviewed, you know, what are the things investors should be aware of? Well, one of the things, the documents must protect investors from personal liability, and they must limit the amount of money investors are required to contribute. Okay, so there shouldn't be any kind of open-ended capital call provisions in crowdfunding deals. The investor should know, this is my maximum. You know, I'm writing a check for 25,000 or 50,000, whatever the number is. That's the amount that I stand to lose. You can't come back to me next year, you know, when we have a COVID-19 crisis and say, you know what, Mark, business is really bad. We need you to write a check for 250 now. No, that cannot be. But assuming it's done right, investors should not have any personal liability.
Okay, right. That's good. That's good to hear. And as far as the company itself, I mean, they are opening themselves up to a lot of scrutiny. I know Harish talked about it, how you know, their team was diligent in answering these prospective investors' questions. So you know, I mean, what should they realize as far as confidentiality of their products and everything, or service, you know, before they embark on crowdfunding?
Well, you're not going to be confidential. That's for sure. That's one thing. I have had people come and say, I got this big secret and we want to raise money through crowdfunding. Crowdfunding is not the way to raise money for secrets. You can raise money for patents, right? You file the patent, so now it doesn't have to be secret. It's protected. But if you have this earth-shattering idea that cannot be patented, don't use crowdfunding to raise money, because it is going to be fully public. And in fact, in Title IV crowdfunding, the Regulation A offerings, you know, you have to actually publicly file all your contracts, you know, with vendors and customers. You have to file all that stuff. And while in narrow circumstances, you can keep some of it confidential, like pricing information, in general, you know, you're raising money from the public. So the deal is, and always has been in American securities laws, you got to open your closet and, you know, shine a bright light in there and let people see all the skeletons. So,
I mean, just
but
to
you don't. Yeah, go ahead.
Yeah.
I'm sorry.
Just to add to that, I mean, being a cybersecurity company, we had some trade secrets and we have a certain way that we would do a few things. If it is necessary and if you can, we would say, you know, as long as you can market about it, there's nothing you should be talking if you were not protected, you know. Maybe you must make sure that you have the right copyright protection, or your idea is patented, or at least a patent is on the way. You have a provisional. So if it is not protected, and if it is not marketable, you would just have to exclude that from any of your material and reserve that for later. And that's the only way to go about it. You just can't talk about it.
Okay. And Harish, you know, obviously you had a great bunch of investors who kind of supported you when you raised this capital, and then of course that led you, you know, kind of outreach. But how are you today? You know, I mean, how do you maintain this? I mean, do you relationships with your early backers? I mean, do you send them any memos, any best practices? How do you engage with them?
No, I mean, like our investors love to call us, and you know, that's just the relation that we have built over time with them. And we do have a close-knit group as far as the investors go, and we send them constant updates. And you know, we're due to send another one, you know, in a few days shortly. But we still keep them fed with info, flush with what we are doing, to keep the momentum going, and that we feel is a really important obligation on our part.
Oh, great. So obviously we live in a different world today, and you know, I advise on M&A deals for a living. So you know, I just, you know, seen from some other peers in the industry that some of the deals are either frozen or kind of falling apart. And in the public markets, I mean, you see that there's the MAC clause, material adverse change, and people are trying to get out of deals. So question here is, in this unfortunate situation, you know, and there might be such cases down the road, how does such kind of MAC, quote unquote, MAC clause, I mean, how does it work in a crowdfunding situation where, let's say, you're halfway through your fundraising and now your business model is not viable anymore, or regulations have changed, or you just, you know, something changed in your personal life. Can you shelve the project? What's your obligation? Do you have to return the money to these investors? If you choose to do so, what's the process? I mean, you know, anything you want to touch upon, Mark?
Yeah, that's a great question, particularly in our current environment. And the answer really is that you've got to stop. You know, you've got to give investors the right to get out. In Title III, there is an explicit obligation that if there is any material change to the offering before it's completed, you know, you do have to explicitly write to investors and say this has happened, and you have the right to get your money back. And in fact, the assumption is that they will get their money back. You have to ask your investors for a brand new investment commitment. And I think it's really a good point that I hadn't thought about before, but I think every single crowdfunding offering, Title III offering that was live, you know, maybe on March 15th, let's just pick that date, is probably should have given investors the right to get out, because it's hard. I think every business, including the business of everyone speaking and attending this event, probably has materially changed, so, you know, with the COVID outbreak. So yes, Title III definitely. Title II, even though it's completely unregulated because it's only accredited investors, yeah, you would be risking a fraud lawsuit not to tell investors, hey everyone, the world has changed. Just want to let you know. And in Title IV, where you've got to get the SEC's approval, yeah, you are absolutely obligated to tell investors about material changes. So now, if your offering just finished, your Title III offering just closed, let's say on March 1st, when we kind of knew this was coming, but or maybe February 1st, before Americans at least realize the severity, you don't have to give the money back just because things change afterward. But if things changed during the offering, then yeah, as much as you would hate it as the entrepreneur, you were just ready to take that money. You knew how you were going to spend it. You were excited. You'd have to take a deep breath and offer to give the money back.
As somebody asked early on, is there a plan for the current cap to be lifted? Kind of amount.
Oh yeah.
Yeah. How much money you can raise?
Yeah. On March 4th, the SEC proposed to make a whole bunch of changes to Title III, which you could. I won't go into all of them here. You could read all about those on my blog, among many other places. But these proposals will make Title III much, much more robust in a bunch of different ways. So, including raising the offering amount from $1 million to $5 million, but other ways as well. So those of us in the industry are very excited about that.
Okay. Harish, for any follow-on rounds, would you consider going back to crowdfunding? Let's say you're, to meet your ongoing capital needs?
By all means, I don't see why not. Seed Invest has the open door for us, and as long as we get through the vetting process again, and as long as we make it through, it is a fair process. So there's no special entry for us. We would still have to go through the same procedures, but we do have a preference when it comes to follow-on funding. Absolutely, yes. We would love to go back to Seed Invest.
Okay, great. I think we are coming up on the close of our allotted time, and I think we did our best to answer almost all the questions that have been posted. So with that, why don't we have final thoughts for the panelists? Vijar, you want to kick it off?
Yeah, absolutely. So this was great. I think there were a lot of questions answered. Regarding my thoughts, I think this space has a lot of runway. I think there's a lot of opportunity for younger businesses, not just startups, but a lot of companies that need to raise capital below 50 million. Clearly, real estate has done really well. I've seen the ups and downs of the space. So I think Mark's right that we're in the early innings. So if you're looking to do this, I think it's a good avenue. And if you need to raise small dollars, it's probably a good chance since the venture community is pretty much dried up as of now for startups. So this is an alternative route.
Mark or Hanish, final thoughts?
Yeah, I mean, I would by all means, if there are companies here today that would love to get into Seed Invest, we would love to, more than happy to look at it. Of course, we'll be able to give you an endorsement if I feel and my co-founders feel like the company does fall in that criteria. So this is knowing a circle, and this is about being honest to the testament that we had with Seed Invest. If your company feels like a good fit, I'd be more than happy to give out an endorsement and more than happy to take a look at pitch decks.
Mm-hmm.
Great.
And I'm just posting my email out there for anybody that wants to reach out.
Thank you.
That's well appreciated. Mark?
Yeah, and I would do the same. There's still a whole bunch of excellent unanswered questions here. And what I'm thinking is, in these days of Zoom, I mean, we could just, with anyone here who wants to participate, or I could just do it. Maybe I'll type my email address here, and anyone wants to contact me with questions, just send me an email. and maybe we'll just organize an impromptu, Zoom meeting. What the heck?
Yeah, so
But
let me make a suggestion, Mark and Sri,
Sure.
because this has been an eye opener for me. Of course, I'm not involved in the field, so you would expect that. But I think for a lot of people, this is an avenue that they know not much about, and we seem to have touched, many areas, including some that require nitty-gritty guidance for people. And Sri, if it's okay with you, I think it'd be very useful to have a follow-on session on this, where some of these questions could be answered that have come up during the chat, but also where you could offer, the panelists could offer nitty-gritty guidance to people, whether it is on marketing or the legal aspects, including how to deal with this current situation. So I think there are a lot of unanswered questions. So it's okay with you and Mark and Harish and Vijar. I think a follow-up session would be very useful. You know that we are trying in particular to address the needs of some of these student entrepreneurs who have startups. And you've highlighted yourself the constraints that exist on getting money in the marketplace. We know some of them, their economic model is no longer viable, so they may have to just wait on the sidelines. But there are some for whom their model is still viable. Yeah. So this could be an avenue where they could really benefit. So if it's okay with you and Mark, Harish, Vijar, I think we should have a follow-up session. What do you think?
Yeah, absolutely. I would more than love to give out advice. As a startup, as a youngster, but still, it's my second time around. But I had a lot of mistakes that I committed, and I had to correct it while I was preparing for our campaign on Seed Invest. More than love to guide other startups.
That's wonderful.
Sri,
Yeah.
what do you think?
No, certainly. I mean, follow-up definitely helps, and maybe kind of the follow-up could be very focused on Q&A, right? I mean, we covered the basics. So maybe we, if we can even get the questions up front and have a compendium, 2-3 page long questions.
I think that'd be very useful. If we could get questions from the attendees as you are suggesting. But there are a couple of things that would be very useful to folks, which is one of them is, what is the pre-prep required that Vijar was talking about, and also in terms of the actual marketing of these deals to do it in a successful way, and what that entails. And then there are some, there are a whole host of questions surrounding the legal issues. And I think a lot of them fall in Mark's area. And there may be things that he wants to caution people about in terms of what steps they should take. So in addition to the questions, which will probably cover these areas anyway, but let's also talk about marketing the deal, how to make that presentation, how to get it done, how to actually get the deal done on a crowdfunding platform.
Absolutely. And
okay.
Sorry,
I guess I will. I'll leave it to you. I mean, people can email me. I just left my email address and my blog address here. People can email me, and then hopefully you guys will organize a follow-up. Maybe that would be terrific. And I really appreciate being invited to attend here.
Sri, you've done an outstanding job along with the panelists, and I really want to thank you for this. It's very useful, especially for me. But, as I said, I was starting with no knowledge. but this has really been very useful. So Mark, Harish, Vijar, thank you very much.
Thank you. Thank you, folks.
Thank you for the
Yeah,
opportunity.
thanks to all,
Thank you.
all of our panelists here for taking the time, and also to Elizabeth, shared her experiences here. Sunil, you have something to say?
No, I'm just clapping.
Oh, okay. I thought you raised your hand. Okay, great.
We're all clapping. We're all clapping. So-
All right. So
Yeah. Thank you.
thanks so much. And again, thanks to those wonderful questions and for all the participants for taking the time today. So we certainly look forward to have a follow-up. And I would, there are some great links posted on this chat window. So please do take a note of those. And you have some interesting material to kind of digest in preparation for our next round of crowdfunding webinar. So with that, again, thanks to all. Thanks for taking the time, and look forward to seeing you on a follow-up Zoom webinar.
Stay tuned. Yeah,
Stay
thank
tuned.
you.
Thanks again.
Take care.
Thank you, Sri.
Thanks.
Thank you so
Bye.
much, everybody.